with REO Reseller, Greg Mooney, our President and CEO, is on with us today. Greg, again, thanks for being here. We're going to go ahead and get started. I'm going to kind of procrastinate here for just a few seconds, just letting some people get in. We've got a lot of people logging on this afternoon's call. So we first want to thank everyone for being here. We're going to be talking about some different stuff today. For those of you that have been on our webinars in the past, we're going to talk a little bit. I'm going to do a short presentation just sort of about the current state of the real estate market. If you're not familiar with what's going on, the trends and whatnot in the market today, I'm going to do some of that. And then Greg's going to talk about REO Reseller, what REO Reseller is up to. And then he's also going to be talking about something we've never done in a live webcast before, and that is we're going to be talking about commissions, fees, referral fees we pay out to folks in the field to refer business to REO Reseller, and some different pricing platforms that Greg's come up with. And then finally, we're also going to talk about some bonus schedules that we have for our other REO reps. So for those of you that are interested in contracting with us, we'd encourage you to get back to us at the conclusion of the call. We can get you contracted. We're going to take questions at the conclusion of the call. So if you look to your screen, to the right of your chat, or to the right of your screen, you'll see a chat box where you can write in questions. We're going to ask you to just type in your questions to us. We'll be glad to answer all those questions at the conclusion of the webinar. We're not going to open up the phone line simply because of the amount of people that we're going to have on the call today. It would be a symphony of lots of noise if we open up the phone lines, so we're not going to do that. If you do want to talk to us personally, though, we're going to leave our contact information. The last slide will be both mine and Greg's contact information. So if you want to contact us, just feel free to give us a call at the conclusion of the webinar. And with that, we'll go ahead and get started. Just to go kind of talk a little bit about, first of all, about this current state of the real estate market, what's kind of going on. There's been some really interesting dynamic news in the last several months with regards to the housing market. This was on ABC News just about a week ago. And I pulled this off the ABC website, just talking about how after the collapse in 2008, how pricing has jumped in some places up to 6%, 3% in October only. Now prices rose in 45 states, led by 21% jump in Arizona, 13% in Hawaii. Many of you know of our chosen market, which is Birmingham, that Greg's going to talk about. We saw a 17% increase in sales prices in Birmingham from 2011 to 2013. So you're starting to see a consistent trend and pattern of, housing prices beginning to climb back up. This is an article that I read just about 2 weeks ago. I'd encourage you, if you haven't read it, you can find it online now. It wasn't online for a little while, but you can find this on the Time Magazine website. It's by Bill Soperito. If you haven't read Bill's work before, he writes about things to do with the economy and whatnot, why investors are betting on the housing rebound. It's a really interesting article because what it talked about a group that was actually heavily invested in the housing market in the late 90s, early 2000s, and they actually read the bubble about to burst. They were actually one of the smart ones that were a homeowner in 2004 and 5 that realized that was the peak, and so they sold their portfolio, and they're just now jumping back in. And that's interesting because we've seen lots of people jumping into this market over the last 12 months in particular, institutional money in particular. But this group waited all the way to almost 2012 to jump back into the market. It's a very interesting article. And this here I pulled off the Wall Street Daily. I try to read this at least once a month, if not more. But this is a really interesting article. I couldn't get everything into this slideshow, but if you go to the website, the Wall Street Daily, April 23rd, 2013, there's a link. You click on it. You can read this article. I'd encourage you to do that. It gives you a lot of really good information. The heading, the front quote was, "The real estate market is on a path to recovery, and there's no better time to buy than now." And interestingly, what this article talked about was, will we ever get back to that 2005 place in terms of pricing? The answer was yes, eventually. We're not going to get there tomorrow, but that's where we're heading. So it's just another sort of a good analysis of where the market is heading as we go down the road in the years to come. This is the Standard & Poor's Case-Shiller Home Price Index. We try to follow this as much as we can, but 6 years after the greatest housing collapse since the Great Depression, prices are beginning to decline. Now, you can go to the internet and find all kinds of stuff about what's going on in the housing market. What you're generally going to read is it's a great time to be in the housing market. The National Association of Realtors is another blog that we follow, talking about home prices jumping 9% in 2012, the largest increase in 5 years, and home inventory levels hit a 5-year low in December 2012. That's a really interesting statement, and it kind of is going to bring me to the next few slides. We've seen a lot of institutional money, which is causing prices to go up, a decline in available inventory. That doesn't mean by any stretch that inventory is going to run out. It just means it's getting tighter, but it's getting tighter because more people are getting into the market. Again, this is National Association of Realtors. 84% believe that real estate transactions will increase in 2013. 77% believe new construction will, again, increase in 2013. This is a really interesting. 74% believe that their local economy is going to improve in 2013 compared to 2012. With all the things we've read about, the fiscal cliff and all these things, the devaluation of the dollar, possibly something on the horizon, all these sorts of events. Interestingly, in the real estate community, they see the economy slowly getting better. And interesting, no market is expected to see a decline in home values in 2013, where in 2012, 1/3 of the market is expected to see a decline in housing prices. I think all this sort of information just points to the fact that it's a great time to be in real estate. One thing that we found, November 2012, December 2012, we really began to see an obvious presence by private equity firms and hedge funds. And for those of you that didn't see the Warren Buffett interview almost exactly 1 year ago, the interview on CNBC, he talked about, the fact that it's, if he could, he would buy millions of single-family homes if it were practical. And of course, Warren Buffett, being Warren Buffett, didn't just say that because he thought it was a good idea. He went out and bought Prudential Real Estate. But what he said was that I can't really do that because I'm not very handy, and that kind of frames what we do at REO Reseller, and Greg's going to be speaking to that. But we did see this obvious presence of hedge funds, and so going into 2013, what the conversation became about internally here was, well, is this a good thing or a bad thing? Is this good that we've got hedge funds in this space, or is it a bad thing? And so we spent a good deal of time talking to them, which is what you need to do. You need to understand what their goals are. And interestingly, when you talk to these folks, you hear a lot of different reasons why they believe the housing market is the best place to be. But I think most of it is just the same sort of stuff that we kind of felt going back to 2008 when we started this business, when Greg Mooney started this company. And that was that, housing prices are going to go up. We're at the bottom of a market. It's going to appreciate. Real estate provides cash flow, good return on cash return on investment, and then ultimately sell at a higher number and see a rate of return that's appealing. And the hedge fund managers see the same sort of thing. It's not rocket science. The housing market's still a great place to invest your money. They feel it's better to have a home, which is essentially a commodity, versus a paper stock, which can go away overnight, as we've all learned. So that's what they believe. So the question begins with this good or bad. And this article here that I found on the internet actually kind of framed it and actually gave 5 reasons, and I pared it down to 3 that I think personally are really the reasons why these institutional investors is good in the market. First of all, they're driving up prices. Simply the fact that they're buying at or above asking price, typically they're driving prices up. Now, this is what's interesting. We look at that like, hey guys, you're overbuying. Why would you be buying that home at $60,000 when we could probably buy it from the bank at $50,000? Well, here's the answer. The answer is the way they see it is they're still in a market that's depressed. So even if they're buying at asking price, they still feel that they're buying under market value. So that tells you a lot about how these very well-educated, experienced hedge fund managers see it. The second thing is that they're buying undesirable property. They're buying many of the bulk lists and tapes that are available out there, which means a percentage of their portfolio will always be underperforming. Now, what does that mean for us? It means that when you invest in a piece of real estate, a cash-flowing piece of real estate, in a neighborhood that had a rash of foreclosures, if hedge funds are buying those properties, it means that they're going to fix them up eventually, they're going to rent them out, and it's going to increase the value of the entire neighborhood. So that's a positive thing. And then finally, and maybe the most important thing, they provide an aftermarket. So, for example, if you bought an REO Reseller property 2 years ago, you know now that you don't have to go very far to find a buyer. If you want to get out, if you want to exit, if you bought a house tomorrow and decided you needed to exit in 6 months or a year, there's plenty of buyers. There's an aftermarket out there now because of the hedge fund's presence in this market. I've been using this slide for over a year now, but it's interesting because it talks about how prices haven't hit bottom nationally. I believe that's now probably true. I think we've probably seen the bottom. There are probably some markets that you may see a continued depreciation in value, but I don't think much of that. I think it's more the opposite now. I think it's more you're going to see prices begin to go back up again. I don't think you're going to see a depreciation of values in many markets now. So I think we've seen that. And I think you're going to see some price increases, and Greg can speak to that. I think that we've held pretty strong with the inventory we've been able to identify at the prices that we've identified those homes to be at. So, but I think you will see those prices begin scalar investors are absolutely here. And then it goes into how does an individual investor get in without cash flying around, and the answer is retirement funds. And so for those of you who have not been on any of our webinars with Active Plan or UDirect IRA or Entrust or any of those groups, we've started doing webinars with groups that had investors that they manage their 401k or their self-directed IRA, and that's a beautiful way to enter into the market. You've got $50,000 in a 401k. It's not returning much on your money. You put it into a piece of real estate. You get cash flow each month. You then sell it at a time to be determined by you, and then you build that account back up. So retirement funds is a way that you can capitalize in this market. Now, if you are considering becoming a rep or a reseller and offering this product out, we will tell you that a good percentage of our sales are through 401k, self-directed IRAs, qualified type money. And we do those webinars for the benefit of our reps, so that if they have clients that they want to show the ARIA reseller product to, they can join one of our webinars. We schedule them typically 3 to 4 days a week, and they can join that webinar in a very kind of hands-off way, be able to see this type of presentation and find out about what we can do for them in terms of their investment needs. So that's why I left that one in there. With that, I'm going to turn it over to Greg Mooney. He's President and CEO of REO Reseller. Greg's going to take us the rest of the way through and tell us about REO, some of the things that we're doing, and then again, we'll be speaking to fees, referral fees, and some bonus structures and whatnot at the conclusion. So Greg, thanks for being here.
All right, thanks a lot, Charlie. Appreciate it. That was a lot of good information. I'm just going to kind of go over who we are, how we started, etc. I know the slide says 2008. It was actually 2007. When we originally started REO Reseller, I think we were a little ahead of our time because homes in a lot of other areas were still declining, and as every year goes by, we could become bigger and bigger and bigger. We are a one-stop shop for investors who want to take advantage of the foreclosure market, but not necessarily having to be an expert in the industry or directly, managing it or any other aspect of their investment. I will say, the more knowledgeable that you are, though, the more that you'll appreciate the details in our program. You can do the next slide, Charlie. Okay, most of you actually, this is really important. I acquired HomeTrader just a few months ago, and I know a lot of you know Jonathan. Jonathan actually has been working for me, if you wonder why he went silent. Jonathan's been working for me for about 3 years now, exclusively. We're going to talk about the marketplace, where he's at, why he's important, but a lot of you know who he is. So I know that a lot of you are just recently, getting emails from us to attend webinars, et cetera, or different marketing. And that is merely for the fact that we have acquired HomeTraders. Let me do the next slide. All right, I'm going to spend a little bit of time on this slide. It's very, very important. I'm going to show you 3 different buying opportunities, and I want to explain that all 3 of them, the same amount of work goes into them. Okay, number 1, we research the area thoroughly. We need to know what's going on the ground. We don't do anything sight unseen. Everything, we have a big operation on the ground, sometimes as high as 60 people at any one given time. Our crews physically, they really do look at over 100 properties just to buy 10. And let me say, you can go down and first we look at them for a price point, then we have to go look at them, then we have to put an offer in. While that's happening, we're actually inspecting the homes, et cetera, et cetera, et cetera. So it's a really intense operation. So, we're not scattered all over the country like a lot of people who do something similar to this. We're very concentrated in one area, but our pulse is on the ground, and we know exactly what's happening all the time, okay? We target neighborhoods where rental values are high and resale values are consistent, okay? Of the 3 programs that you're going to see today, I want to stress the fact that the average rent in these neighborhoods is $735 a month, and they have an after rehab value of at least $55,000, and sometimes it goes a lot above that, but typically it's $55,000 plus, okay? Now, we buy REOs through a lot of different sources and stuff. Fannie Mae, Freddie Mac, of course, HUD, yes. But we also do a lot of private party sales. We actually work with other groups. Some of you actually may be on the phone right now. But I want to stress that we don't buy bulk list tapes, anything like that. Everything is just as I said. We spend a lot of time picking out every single property that's out there. Another thing is we buy based upon the yield, not the comp. Let me explain that. Most of these homes will comp out through, like, your Zillows and those other, I really don't put a lot of credit to, in those types of things. But we base it basically on the yield, okay? And what I mean by that, our investors typically see on the low side 10%, on the high side 15, 16% return on their money on an annual basis, and that does not include the appreciation of their house, okay? And of course, we provide a fully managed system. It could be long-term or short-term. You can do it yourself. You'll see what I'm talking about in a minute. But we have an excellent property management company in place. They really take care of everything. They really know what's going on. We literally have waiting lists for people to rent homes, and I just can't say enough about them. You can go to the next slide. Why buy in our chosen market? I can't stress this enough. Okay, a lot of people, I get phone calls constantly. Can I have property in Southern California, Nevada, Arizona? And there's other parts of the country too. Okay. Charlie, can you fast forward a little bit? Okay. This is the most simple way I can explain why we do what we do and where we do it. Okay. If you were to invest and you paid about $500,000 for it, okay, that house is only going to rent out for about $2,200 a month. Okay, maybe a couple $100 more, maybe a couple $100 less. But after that, you got to take out the taxes, the insurance, the management costs, on and on and on and on. In some cases, you're not going to have any cash flow. What are you going to be left? I mean, we don't have to go into the property tax and all that, but it's expensive. Versus, in our market, you can buy 10 properties. The average monthly rent is going to be about $735. So you're going to be grossing over $7,000 a month or $5,000 a month net. And I'm talking after property taxes, I'm talking about insurance, and I'm talking about property management. So the whole idea is, rather than have one thing and putting all your eggs into one basket in a house in a lot of different areas, you can spread it out over 10. So if one month you have a repair cost, or you have a move out, or you have this, and the property management is in place, you really don't have to do anything other than take a phone call. And sometimes, depending on what program you choose, we take care of all that for you. So basically, it provides more cash flow and diversity in your portfolio. Can you go to the next slide? Okay, I can't talk enough about Birmingham. You can tell I like it. CNN Money named Birmingham the 10th best overall real estate market in the U.S. They also named Birmingham the 3rd fastest growing real estate market in the nation. New Wire Investor did a study of the 10 best cash flowing markets in the United States, and Birmingham was 3rd. There's a lot of revitalization, economic development, bringing back what they call the Magic City. Don't go forward yet, Charlie. I really want to start. There's so much going on in Birmingham. There's so many good things to say about it. I really get on the internet, go ahead and Google it. But let me explain some of the reasons that may be not so obvious. A lot of people have asked me over the last, the course of especially the last 3 years, why don't you go to Atlanta? Why don't you go to Atlanta? And Atlanta has been a great housing market for a considerable amount of time. The problem that you have is, it is overbuilt. You can buy homes cheap in Atlanta. I mean, you can buy them cheaper in Indiana and Michigan and there's tons of places where you can buy decent homes in decent neighborhoods for cheap. But the bottom line is there's just not enough renters for them. The great thing about Birmingham is we always have a steady flow of renters, qualified renters, et cetera, et cetera. You can go to the next slide. Sorry if I get a little too excited about Birmingham. Okay, a lot of people have asked me recently, especially some of you that were Jonathan's customers or associates, etc., from Home Traders, and they keep on asking me, well, can I just buy this, or can I buy this, can I buy this? Or even better, I have this, I have this, I have this, okay? So we're going to do this, and it's okay if you're a buyer on the phone today. There's no secrets here. But a lot of you are repping different types of real estate products or associated in the industry. So what I've done is, for the benefit of all of you, to show the diversity of what we can do, I put together 3 simple programs, okay? We're looking at, I hate calling it Tier 1, but whatever. It's $29,900. That's still going to be the same house that rents for $735 a month. It's still going to have to, an after rehab value of 55 plus. Again, they're hand-picked. We go through a lot in the background, and it's in a great market. And of course, it covers closing costs. So there's no hidden fees. This is what the buyer pays, et cetera, et cetera. Okay, then Charlie, if you can go to the next slide. Okay, Tier 2, and again, I'm doing this because I get asked these questions daily. This, again, the same thing, it's the same house. It's hand-picked, the closing costs, great market, on and on and on. But this one's rehabbed to rent-ready condition. And just so whether it's a preference of yours or not, I know in certain market conditions, having a Section 8 renter is a bad thing. I will tell you in Birmingham, it's actually a good thing. The people in Birmingham walk around with vouchers, $8 to $9, $100 a month, and it takes them a long time to get on the list. My point in saying this, they typically, aren't your Section 8 housing. Like when I was in Chicago, they would trash their place, et cetera, et cetera. In Birmingham, they're going to wait a long time to get on the list. They take care of the house, et cetera, et cetera. But the reason I'm telling you this is because we rehab our houses to HUD specifications, which is a much higher standard than your typical real estate outfit saying that it's rent ready. So we do go the extra mile, and I would say about 60% of our homes are occupied by HUD renters. And Charlie, you can go to the next one. Okay, this one's going to require a little bit extra explanation. Again, it's the same house. It's the same closing cost, same market, rehab rent ready, okay? But here comes the difference. This has been our bread and butter for, I would say, the last 4 years, okay? And this may be for some of you, it may not be, okay? But a lot of times, especially when we're dealing with people who have self-directed IRAs, that type of thing, they want to invest in real estate, but they don't know how. Many of you might know, you could go to Birmingham and you could try to do this all yourself, but by the time you try to do it, you'd be in the house for more than these prices, et cetera. Unless you're an industry professional, and I'm out there outbidding anyone anyways. But here's the difference with this. This is for people who may not be that experienced, or so people who are retired or want consistent income, et cetera, et cetera. The big thing here is the home comes with a 1-year warranty. I can tell you that 90% of our, at least 80%, I should say, of our repair costs have to do with plumbing. We can do the best job that we want on the rehab, get everything going, but you know what? When you get 3 people moving in a house, something's going to go, and it's typically the plumbing. It can be something small, like a few leaks here and there. It will happen because the house was not occupied, and obviously we redid it, et cetera, and you can't really test the water pressure to that degree. So, 30 to 90 days of use, things start leaking, et cetera, okay? The worst example that we've ever seen is, it actually just happened, this month. And there was the main sewer collapsed. And I think a lot of people know that can be pretty pricey. The repair cost on that was over $6,000. But the client didn't have to pay anything. It came with the warranty and no out-of-pocket expense. Okay, the next thing is we're so confident in what we do is that we offer a monthly rebate in the first year. Let me explain what that means. We will rebate a percentage off the price of the home for every month that it's not rehabbed or not rented. And it's about $400 a month, okay? So person comes in, needs income, et cetera, et cetera. They're going to have immediate income. A deal closes by the 15th. We're going ahead and already making their first payment to them on the 10th of the following month, okay? The next thing is that the taxes are paid, okay? You don't have to worry about the taxes or the insurance, okay? That's already paid. Now, you notice there's this home warranty. I want to share the difference with you. REO Reseller goes ahead and warranties the entire house, everything, for 1 year. But we also, at this price point, will be putting on a home warranty, okay? Now that's going to cover the little things inside and this and that, but that's not going to cover large things that are outside the home, like in this case, the pipe that collapsed, okay? So we go ahead and we offer all these things. And obviously, yes, the property is managed. Again, if this person isn't that sophisticated and they want more stronger guarantees, they're going to like this program for, all the guarantees, warranties, et cetera, for the more consistent income and redundant. Next slide, Charlie. This is just an average house. Most of our houses are 3-bedroom, 1-bath. I will tell you, a lot of people ask me, well, why not 2-bath? It's kind of interesting. In the Birmingham area, if you get a 2-bath, your real estate taxes are almost double that of having a 3-bedroom, 1-bath, okay? But this is just an average rent. There's the breakdown. Renting for $800 a month. Property management, average insurance, average property. So your total operating expenses, is $199. I will tell you, our average is $735. We don't do anything less than $700, but of course we do have some that are in the 8s and 9s and above that. But the bottom line here is, this is based upon the 49.9 model, where everything's covered, warranty, etc. You can see even after all that, your cash-on-cash return is still almost 13%. That's a pretty good deal. Now, going back to the second tier, if you were to acquire one of those homes, and that's the one that's already rehabbed, but you would take care of all those things yourself, because of the difference in the sales price, that's actually about a 15% internal rate of return on cash-on-cash. All right, you can go to the next slide. This is just a average typical home. You can see the outside is just, again, Birmingham, this is pretty normal. I mean, I could have showed you a lot nicer ones. But you can see the rehab. You can see how nice the floors are, the windows, et cetera, et cetera. And again, at $49.9, 3-bedroom, 1-bath, just at the $735, it's going to net you at least 12% return. Let me go to the next slide. Okay, I want to stress prices start at $29.9. There's no hidden fees. Okay, there's no additional commissions. There's no extra escrow. It includes everything. Okay, there is absolutely nothing more. They're not going to have to pay for anything other than what's on there. I do want to mention some of our teams and people that we work with. We do not escrow our own properties. We do them with Fernley McDonald. The reason we chose them, they're one of only 3 title and escrow companies that are allowed to do FDIC bank foreclosure liquidations. So they have an excellent reputation. People like the fact that they're not escrowing with us, and they don't get a house unless it's completely clear of any encumbrances, liens, et cetera, et cetera, et cetera, something like that. You can go to the next slide. Okay, we're going to kind of dig into, Charlie, if you want to come on back in and we can kind of go over this together. Now, I know a lot of you responded to, hey, how can I make $40,000 a month or more? Okay. First of all, I'm going to go over this pay situation, but I want to explain to you how easy it could be. REO Reseller will pay an 8% finder's fee on each sale. You're not splitting that with anyone. That's yours. You send the client to us. You help us with the paperwork. You get it moving in the right direction we'll pay you an 8% finder's fee. So, you know, on our $50,000 product, 8 times, 5, that's $4,000 right there, okay? Now, for anybody who contracts through REO Reseller, and you have a distributor agreement, I want to stress this, you do not have to have a real estate license. You don't have to learn anything more than the basics and what's really on. But if you sell 2 or more, which is pretty easy to do, you're going to receive a $1,000 bonus, okay? If you sell 5, and this is all within 30 days of your contracting, you're going to earn an extra $3,750. And if you sell 10, you're going to get a $10,000 bonus. All of these are very realistic depending on how you want to participate, et cetera, et cetera, et cetera. One of the things that I'd like to go over is, this is the first time we've opened up and had a webinar to invite people to go ahead and be involved, with the company on a sales commission or referral fee or whatever you want to call it. Our most successful reps, this is all they do. A lot of you probably have clients that you deal with. Maybe, you work on little deals, big deals. It really doesn't matter. But you have contacts. One of the most easiest and most successful ways for our reps to get started and get started quickly and qualify for, the 10 grand or more is, we can, depending on your contact list, we could do a separate webinar for you. But the easiest way to do it is we can actually set you up with your own link so that you can track exactly who your clients are. And, I don't want to get into so much detail, but the bottom line is we can make it very easy for you. And, of course, a lot of you on the phone are in the industry. If you're looking for inventory, if you're looking for good inventory, and you're looking to flip it, I mean, you could do the $29.9, do your own rehab, or you could do the $39.9, let us do the rehab, and you can go ahead and flip that house. And it's not hard to do. So is there anything else you wanted to add, Charlie?
Yeah, a couple things actually, Greg. Thanks for that. Greg mentioned, this is the first time we've opened this up, and let me explain the reason why. In the last 30 days, I've had, I don't know how many, 8 or 10 webinars, and it seems like on each one, we've been asked by somebody on that webinar, do you pay a referral fee? And so Greg just decided, well, let's just open it up. Let's just let people have contacts out there. They want to refer to business and get paid for doing that. Let's just open it up. So that's part of the reason why we did this. The second thing, it's important to know that as a rep, if you're interested in being a rep for REO Reseller, I work with the agents pretty much on a daily basis, the ones that we have now. And what you want to know is this, is that when you refer someone to us, we're not going to, first of all, we're going to support you. We'll support you via these webinars that we'll do. We can schedule these at any time. I do these not only as we advertise out to the masses. We have a couple different lists that we work, and we send out invitations to lots of different people. But I also do these for individuals. An individual may have 2 clients that are interested, but they don't want to get on a webinar where we have to have the phone lines muted because they have so many people on the call. They want to be able to have an interactive conversation about what we do. We do those for those reps. So we'll provide 100% support for you as you do this. And the second thing is, Greg Conrad Ercolano is our general manager. Very easy to work with, always willing to be on a phone call, always willing to be there to support you. So just know that we're not just going to say, here's our paperwork. We'll help you and support you in every way that we can. And we're going to leave this information up here for a few minutes. We'll go ahead and take questions now. If anybody has any questions, just type them into the chat box there. And if you just would prefer to talk to one of us directly, I'll just leave these numbers up here for a few minutes, and you guys can write those down. We'd love to talk to you. Greg, anything else? Let me see if we got any questions here in the chat box. I don't think we got checked a minute ago. I didn't see any. Let me just double check here real quick.
Yeah, we're probably going to get a lot of calls. So if you call me and I don't answer, please leave a voicemail. I will return your call as quickly as possible. But sometimes it gets to be a little overboard.
Okay, Greg, we have one question here, and you can go ahead and answer this. Do you specifically target Section 8 eligible rental areas?
Not 100%, not necessarily, but you're receiving the check from the government. The clients take care of the houses, so we always prefer a Section 8 versus another. But we've had people who really don't understand how HUD works and say, I don't want a Section 8 renter in my house. So we'll work with you. You know, if you definitely want one, we can definitely do that. And if you definitely don't want to do one, we can do that too.
One thing I think is also worth pointing out, Greg, is that we currently right now have a package of 24 homes in Birmingham for sale, which I think are priced right about the mid-$45,000 range, 46, 47, whatever it is. And of that small portfolio, 12 of those are Section 8 renters. We have Section 8 tenants in there. So if anybody's interested in a larger group, we do have one larger group that we do have available. Greg, that still is available, right?
Yeah, of course it is. Yeah, it is. We didn't sell it yesterday. You know, and we also have other things available. And once you get to know more about REO, you know, I only went into the 3 tiers, but you know, with our company, the beauty is actually in the details. It's not the devil in the details; it's the beauty. Because the more you know about us, the more you look at, you know, our paperwork, the way that we do business. We are very, very, very customer friendly.
Don't have any other questions in the queue, Greg. So what we're going to do is we're going to stay here for about another 60 seconds. If there's any other questions, we'll be here to answer. I'm going to hit my mute button. If you have a question, just throw it out there. If not, again, we're going to leave our information up here on the screen. Love to talk to you. And as much as anything else, I want to thank everyone for being here today. We do have another one of these today at 3 o'clock if you're interested in attending that. So again, I want to thank everybody. And Greg, thanks for taking the time out.
No, thanks for having me.
Okay, I'm going to go ahead and hit my mute button. If I see, we do have another question. Can you offer assistance with IRA money? Absolutely. We've got a bunch of folks that we work with. You might want to call me on that. So I clearly understand your question, but can you offer assistance with IRA money? Absolutely. Greg didn't give his background, but Greg spent years and years and years in financial services, so he understands that world as well as anybody does. I think Greg, would you train like 2,000 reps for American Express or something like that?
No, between Provident Mutual, American Express, Prudential, I trained over 1,700 reps. I was in the business for like 18 years.
So we can help you with that. And if you're looking for,
yeah, I'm sorry. Go ahead, Charlie.
What I was going to say was if you're looking for a good third-party administrator, somebody that can help somebody set up a 401k or a self-directed IRA, I've got a couple people that I'm kind of partial to. We do these webinars with a lot of different groups, financial institutions that manage people's 401k or self-directed IRA money, and we've been given access to lots of clients through those groups. But there's a couple that I'm really partial to, a couple that I think really do a super job. So if you're looking for someone to help with that, I can certainly give you a referral on that. And we didn't mention today, we also have somebody, if you're looking for someone that could provide some non-recourse lending, we do have a contact that we've recently accepted as a preferred vendor of REO reseller. I will tell you, non-recourse lenders is a slippery thing. There's a lot of them out there, but not a lot of the deals are very good. We would always tell a client that if they're cash liquid, there's no need to involve a non-recourse lending party in the equation. But if there's someone with a need and wants to be able to buy something on a finance type basis, we do have access to a non-recourse lender. Okay, Greg, I think that's it. I'll leave this up here for another minute. I'm going to hit my mute button, put my phone down. If anybody's got any questions, give us a call. If you have a question you want to type into the queue, I'll hang around for another 60 seconds or so. But if not, we'd love to talk to you, and we appreciate everybody being on today.
All right, thanks, everybody.